What's up, everyone, and welcome back to the Stocks with Mike and Tom show. Today was brutal for the markets. So many stocks just got destroyed. We had the S&P 500 down 2%, and I know that's a lot, but it's actually not that bad compared to a lot of these other growth stocks. We had poor DraftKings down over 7% today. DraftKings took a beating. Tesla took a beating. AMD just got destroyed. It was a brutal day today. So in this video, we're going to explain why this is happening and basically what's just going on in the market right now and some potential opportunities for tomorrow and the rest of the week. So with that being said, stick around to the end. We have a lot of great info today, and let us know what stocks you're watching. If you let us know in the comments down below, we'll probably take a look at them in tomorrow's video. But Tom, let's get right into it.
Yeah, the minutes from the last FOMC meeting actually came out today, and this is what really made the market drop. We can see that pretty much right whenever these minutes came out, the SPY just started tanking off to the downside out of nowhere. We fell below this key 476 support, going all the way below 470 here right at after hours. It's just a crazy day overall, and I cannot believe that we're closing down below 470 today on this. But with this being said, apparently the central bank is talking about aggressively dialing back their asset purchasing or their policy help. And whenever you look at this, this is going to be huge for the market, because as they start to taper these asset purchases, it's going to put a lot more pressure on stocks and on the markets. Right now, they've been buying up bonds at a pretty rapid rate, and they're going to start slowing that down pretty extensively. And CNBC says that the current market expectations are for the Fed to start raising their rates in March. And that's a pretty big thing to hear. March is a lot sooner, I think, than a lot of people thought.
Yeah, so in simple terms, there was a Fed minutes report today, and it looks like the Feds are going to stop pumping the markets sooner than everyone thought, or the expectations and probabilities for when the Fed kind of tapers its asset purchasing, that's always changing. But basically, the market did not like the Fed report today. So many stocks got destroyed. And Tom, how about we pull up the interest rate chart really quickly? Basically, what's happening right now is we are seeing 10-year treasuries really rise. And basically, when we see rates rise, that is horrible for growth companies. A lot of these stocks that we saw just explode up over the past couple of years are getting destroyed right now, and that's because rates are rising. So when rates rise, it's bad for growth stocks, and it's usually good for I guess you could say some companies that are in great financial positions already. And normally it's good for financial stocks as well, like the bank stocks. But with that being said, rates rising is just really hurting the market. And then, Tom, I just want to go over a couple different ETFs that people can trade for rising rates. Let me just list a couple of them off really quickly. With the first one, we have IEF. So if you're looking to play rates rising, you can play IEF to the downside. Maybe you can buy some puts on it, maybe short it. So that's just one potential play. We also have TLT to the downside. We also have JNK to the downside, even HYG to the downside. And then if you just want to keep it nice and simple, if rates rise, TBT should also rise. So TBT, we can see that had a decent day today. These rates/treasury ETFs can be a little complicated, so please keep that in mind. But Tom, it's crazy.
Yeah, it is. Today was just a really crazy day. Like you said, lots of negative movement. If you name the stock, it was probably down today. Only a couple stocks like Intel and a couple others ended up in the green with some good news. But, like we're seeing the EVs with Tesla starting to really tank off. We can see on the 5-minute chart, they are really falling off. And Mike, I really wanted to hit on some of these big tech stocks. We are seeing Apple, the blunt force of the market, getting destroyed today, down 2.6%. I know that they became a $3 trillion company earlier in the week, but man, they gave back a lot of those gains, and it looks like the market is definitely not liking it. And these big tech stocks, I think, are the main reason, like Apple, AMD, Nvidia. It's not going to be good for these innovators, you could say.
Yeah, so if you're holding shares or any bullish positions on companies like Nvidia, AMD, Tesla, or anything like that, in my opinion, it's not a bad time to hedge. Maybe you get some good quality put options. Maybe you sell some covered calls. Maybe you just limit your risk in some way because the market is looking pretty tough right now. There's a lot of selling pressure. And as we can see today, like the stock market normally takes the stairs up and the elevator down. Like, I mean, there's just so many stocks that are tanking and puts, like, even though like a lot of puts rose today, like they're not like crazy expensive just yet.
Yeah, they're not too bad yet. And I'll be honest, as AMD starts to go down, they'll probably go up in quite a big way. And I'll be honest, AMD is starting to get pretty close to some of these big supports. I was pretty surprised to see them fall below 140 as significantly as they did today. They ended up going down quite a bit. And as we look at these stocks, especially on like the 1 hour chart, we can see there's a huge support on AMD at 133.50 and then at 130 even after that. I think 130 even is going to be the next big support. But as we can see, I mean, it's starting to go down at a rapid pace. And with that lower high up there, Mike, I could possibly see it starting to break these major supports, kind of like what we saw today. I'm not saying we're going to fly down tomorrow, but man, it's not going to be good for the next month, I don't think.
Exactly. And then there's just two more stocks I want to cover, and that is VXX and UVXY. When the market goes crazy, and especially when it falls a lot, these stocks, VXX and UVXY, tend to rise significantly. We can see VXX is up nearly 8% today, and UVXY is up around 12%. Just one thing to keep in mind, these ETFs are pretty risky, but when the market's tanking, these ETFs love to shoot up.
Yeah, they really do. I know you can catch some really good gains on some of these if you catch them at the bottom. And looking at it on like the 90-day, 15-minute chart, you can see like UVXY has been getting destroyed lately. It started to actually form a pretty decent support here. So hopefully we can see some good gains. And honestly, I could see them possibly coming up to that 14 resistance tomorrow.
All right, so with that being said, let's get right into the momentum plays for tomorrow. With the first one, we have Facebook to the downside.
Yeah, Meta is falling down. Go ahead and make them break below 323 even to the downside.
All right, with the next one, we have Microsoft also to the downside.
Yeah, go ahead and make them fall below 315 even.
All right, and with the last one, we have Neo also to the downside.
Man, poor Neo, not again. Make them fall below 29.50.
All right, so we are watching these three stocks for potential day trades to the downside tomorrow, only if they break below the level Tom listed. And with that being said, I want to give a huge shout out to our member of the day today, which is Ben M in the Discord. Thank you so much for all of your activity. You've been with us for a while, and I know you join the stream sometimes too. So Tom and I just want to give you a shout out. Thank you so much for all of your support, and huge shout out to Ben M. But with that being said, let's get right into the comments from the previous video. With the first comment, we have Reggie saying, love the video. I am thinking about buying some VUZI. He said short squeeze may be coming. So yeah, it got kind of destroyed today. I know that their short interest is decent. I believe it was like 20% the last time I checked on FinViz, but you would just need, honestly, just a higher short interest or a higher short float. And another thing is when the market is tanking like this, it's actually really, really good for short sellers. So, you know, when we saw GameStop and AMC short squeeze, like short sellers really got pinned, but now they're pretty happy.
Yeah, they definitely are. And they've probably been adding into their positions and stuff as well. But as far as VUZI, I don't know what to think about this one, Mike. It looks kind of like it's in one of those growth type of setups, but I will say it's not my favorite, and I'd rather trade something else personally. I just can't imagine like these stocks short squeezing again. So I don't know. Personally, it's just not for me.
Yep. All right. And then we have Manny saying, nice video. What do you think about XERS? So this is a biopharmaceutical company. These things really move off of like catalysts and news, but it's really not a play for me. It's a penny stock. It's really risky. And especially in this market, it's just not a great setup, in my opinion, as of right now.
Yeah, it's super low. There's a pretty good support at $2, but we're still 50 cents away. And with how low of a price it is, it's going to have some pretty big swings. So I don't know. It's just not for me either.
All right, and then we have Rich saying, how do you like Fubo at these levels, short term or long? So it's okay, but again, it's just like it's not an A plus setup to me. That doesn't mean it's bad. It's just like some of these other companies are safer and they have arguably higher potential reward, like Zoom and a couple other ones. I know a lot of growth stocks have just been getting destroyed, and it just sucks to see. Like every day you check these growth stocks, and it's just like more and more selling pressure. So it really hurts short term with a lot of them. But long story short, I just like other growth stocks better compared to Fubo.
Yeah, me too. And the argument for Fubo is pretty strong. Like it's a sports streaming service. Those streaming services can get pretty big, but Fubo's definitely not having the movement that people were looking for. And with it falling below this 15 support, it's just not looking good short term.
For sure. So Tom, do you have any last minute plays or setups for tomorrow?
Man, it's not looking good for a lot of these plays. I know Enphase had a pretty bad day, down 11%. I cannot believe that we're starting to see like them sell off as drastically as they are, along with other companies like Roku, another one that was doing pretty good like with the growth stocks earlier in the year, but once again they're just down around that major support and it looks like they're falling through, and a lot of these growth stocks are starting to fall through these big support levels, and it's not a good sign for the short term. We have AMD, Apple, and those other stocks dragging down the market. So I would say, puts is probably going to be the smartest way to go over the next few weeks. That doesn't mean puts on the SPY. I feel like that there's other opportunities out there with other stocks and other sectors. But looking at it, I think that the market could definitely continue down. Maybe not tomorrow, but probably over the next few weeks, we're probably going to see a bit of a pullback. The news with rising rates is pretty important, and we'll definitely be talking about it a lot over the next couple of weeks.
Exactly. Like rising rates is very, very important, just like Tom said, and it really hurts these growth companies. So we're set for a wild, wild start to 2022. We have a lot of volatility ahead of us. But with that being said, thank you guys so much for watching today's video. If you have any questions, let us know in the comments down below. But other than that, thanks for watching.